Hello and welcome back to The Note. Let's take the temperature of Europe today. We had very interesting developments at the end of last week. First of all, the ECB met and surprised a lot of people by really doing nothing, despite many fears that there is an incipient deflation problem in the eurozone. And then we heard from the German Constitutional Court, which ruled on the critical issue of whether the outright monetary transfers, which the measure that was announced by the ECB some year and a half ago to quell the crisis, whether they're constitutional. That measure now goes to the European Court of Justice. What should we make of these measures? How do they affect the eurozone? With me now to discuss this is the Deputy Chief Investment Officer at Pimco and former Financial Times colleague, Andrew Bulls. Andrew, thanks for coming back to the FT. Let's start by taking a quick look at the inflation picture for the eurozone. And it does look as though there is a case to be answered there, that there is a potential deflation problem arising. What do you think the ECB could or should be doing about it?
So I think there is an issue. I mean, inflation is well below 1%, trending downwards. Mr. Draghi pointed out that a lot of this is to do with the adjusting countries, the peripherals, which is correct. But look at Germany, look at France, everywhere, inflation is trending downwards. I think for now, clearly Mr. Draghi signaled they want to take more time, assess. The problem they have is entrenched expectations. If deflationary expectations become entrenched, if that's a concern, they're going to have to act, and I think it's likely they're going to have to act.
Okay, and when we say act, base rates are already at 0.25%. Are we talking about actually negative rates on deposits? Are we talking about a European version of QE? What can they do at this point?
So they can cut rates a little bit more. I think it's kind of fiddling around at the margin. They can cut direct deposit rates a little bit negative. I think the big question, it's not going to come up next month, it could come up the second half of the year, is whether they do some European form of quantitative easing. Could be credit easing, buying private sector assets, which Draghi and others have referred to recently. It could ultimately be government bonds, which is a much more straightforward and probably more effective way to do it. They want to make a distinction between crisis measures, partly because of the constitutional issues you mentioned, crisis measures and macroeconomics. But if inflation is below 1%, if it's trending down, if they get more concerned about downside risks, there really isn't any good reason why the European Central Bank should sit on its hands at a time when the Fed, the Bank of England, the BOJ have taken pretty significant action against similar kinds of risks.
And just to be clear, the difference between the outright monetary transactions which we heard about in the summer of 2012 and QE, OMTs would be aimed at specific countries that were in true crisis at that point, rather than a QE would be more of a generalised measure to reduce rates.
Yes, that's right. Firstly, I think the OMT, when it was announced, a lot of controversy about introducing it. It was really important, the signal. The ECB will be the backstop. But doing something country-specific maybe raises some more issues. Is this quasi-fiscal action? Whereas if you buy, say, government bonds across all countries in relation to the size of the economies, then you don't have this distributional targeted element. And that, I would see, the way they have described it, is aimed at the overall Eurozone economy, and what I would see is real deflation risks for the Eurozone economy.
Okay, now let's move on to the core sovereign crisis. This is a chart we've shown many times before in different forms, although we've been looking at it a bit less recently. It's the spreads of Spanish and Italian bonds over bunds. This suggests plainly that the worst of the crisis seems to be behind us, but also that we're not back to anything like normal yet. How do you view this? How do you play whether we still have a risk of further crisis in the periphery?
Yeah, I mean, you had an acute stage of the crisis. These exciting times, 2011, 2012, the announcement of the OMT, which regardless of the details, the ECB saying we will be there to backstop the Eurozone here, and you've seen the healing since, as you've seen. 200 basis points spread here for Italy and Spain, the 10-year. These are still significant spreads, but the way I would characterize it, you go from the acute stage to the chronic stage.
Right.
Issues now, there's a lot of issues. There's the fact that there's these questions about OMT, the ECB's role. It's much harder with 18 countries than with one country. Second, they haven't done a great deal in terms of the banking union, the backstop for the banks. But third, I think the chronic issue, that the secular issue is growth in the eurozone. If the eurozone can't grow, if Italy, for example, can't grow, then there are significant medium-term issues. If you have your nominal yield well above your nominal growth rate, that doesn't make for stable debt dynamics. So the crisis, I'd say, isn't over, and the possibility of the ECB over time doing credit easing, doing quantitative easing, maybe that can help to get these yields down to more sustainable levels, or I should say these spreads down to more sustainable levels.
Okay, Andrew, thank you very much indeed. In sum, it does look as though the crisis per se, as we have come to know it, may be in the past, but that doesn't mean that we don't need to worry about Europe. There are still very significant concerns about growth in the eurozone following the measures that have been taken to deal with the crisis. You can't say that the whole problem is over just yet.